What's going on, stock market nerds? My name is Kolya, and today I would like to make a video about Robo investing. You probably know of such platforms like Wealthfront, Betterment. In Germany we have Ginmon and Devamo, but there are all sorts of platforms that have software and algorithms, usually also accessible with your smartphone via an app, that where you can type in all sorts of data. For example, how much risk you want to tolerate, what the drawdown is that you can accept and stuff like that. And then they take your money and invest it in usually index funds. But they don't do it by a hedge fund manager, for example, or another manager who, through stock picking and market timing, selects one particular asset, for example, one Apple stock or something like that. But they have an algorithm and they select the index ETFs or other funds by the data that you type in there. So basically, it's a form of algorithm through a computer software where you usually have a really nice overview in your portfolio and you can manage it together with your normal bank accounts and stuff like that. And it's like sold to us as a simple form of investing. So what's my take on that? What do I think of robo investing? Is robo investing a good thing? Should you invest money into robo-advisors? And my answer to this question is, it depends actually. So there's of course different types of people, different types of risk tolerance, different types of time that you have to invest in stocks. So some people, they don't want to invest all that time. They just say, okay, I don't want to have much to do with it. I just want to participate in the global economy, but I would like someone else to invest my funds, and that's totally okay. But there are other people, for example, I, as a nerd, always say, if you want to become financially free and have your investments work for you, one of the most important qualities, or actually character traits, is that you have self-responsibility. What do I mean by that? I mean that you basically are yourself accountable for your results. Not only in investing, but with your entire financial situation and also everything else in life. Of course, you can't predict everything in life. Of course, you can't influence everything around yourself. But the results you are accumulating in your life are a direct response to whatever choices you make on a day-to-day basis. So, of course, sometimes you get lucky, and then, of course, other times you're not as lucky, but in the long run, everything pretty much evens out, my opinion. So, if you want to become financially free, you take your money in your own hands, and you invest it in your own stocks or ETFs, and you don't need another advisor. You don't need a hedge fund manager. By far, you don't need a hedge fund manager, and you don't need a robo-advisor. In fact, if it's your money, you're the only person in the world which will and can take full responsibility of your money. In fact, Milton Friedman, the famous economist and one of my most valued economists, says there's basically 4 steps of how much we care about the money we spend. So the first step is your own money that you spend on yourself or your investments. And that's the form of spending money which we have the most scrutinism. So we really focus hard on what we do, and we care a lot about how we spend this money, okay? Then there's a second stage where we spend our own money on other people. For example, Christmas presents or other forms of presents, donations, stuff like that. We also take a lot of responsibility, and we want to know where we spend this money. This is the second stage. Then there's this third stage, and we don't care as much about money that belongs to other people, and we spend for ourselves. That's not a stage where you will have a lot of responsibility and take a lot of accountability. And then the last part is where you take other people's money and spend it on other people. That's actually the form how government does it. And they don't have a lot of responsibility at all as to how they will spend it. And that's why the most important decision almost always is to take your money and invest it by yourself. So for people who want to invest a little bit of time to read some books about passive investing or about investing in general. For example, a real good book about investing is from Ken Fisher. The Myths about the Stock Markets is one of the best books, I think, for beginners. Then you can just take your money. For example, you have $10,000 and invest it in an MSCI World and an MSCI Emerging Markets. For example, 70% in the MSCI World and 30% in the MSCI Emerging Markets if you want to invest for the long run. And you'll be basically fine, and you don't have a lot of fees. It's really not cost intensive. But if you take your $10,000 and put it in a Robo-Advisor account and invest it with a Robo-Advisor, and you say, I want to invest for the long term, and I can, it's totally fine to take some risks. The drawdown is okay if it goes down by 30–40% because I want to invest long term. So if I have a lot of volatility in between, it doesn't matter because I invest long term, and then I have a really high return in the long term. So if you type that in the software, they will do exactly the same thing. They will invest in the MSCI World and they invest in the MSCI Emerging Markets or some other large index, for example the S&P 500 or the Wilshire 5000. So, but you pay more because you pay the same fee for the ETFs that they invest in, and you also pay the software guys, the people that build the software. For example, a lot of them have performance fees. Yeah. So for people who want to take full responsibility, I don't think robo investing is necessary. I think you can do better on your own. But then there's those people who say, okay, I don't want to invest everything on my own. I need an advisor because I don't have the time to invest everything myself. And for those people, I think robo investing is actually quite interesting if you compare it to the classical form of money management, where you pay 2 to 3% or even more percent of annual fees for the managers, and you have high transaction costs when you actually buy the fund or buy the stocks. So I think for these people, or for those people, I think Robo-Advisors actually quite a good thing to do, like for example Wealthfront. So that's basically the video for today. Now you know what robo-investing is. I think robo-investing definitely has a future and has a market, but I don't think that for a real stock market nerd that you need that. So that's my take, and now I would like to know, what do you think about robo-investing? Do you think that it's an important tool that you can use, or do you think, actually you're right, Kolja, you don't need robo-investing? I would like to hear, so comment below and feel free to subscribe to our channel. See you next time. Bye.